on Paycheck Protection Program, of course, this is the biggest change and the biggest opportunity for those who have been most impacted by the pandemic. Those that have actually experienced sales declines. There will be another draw available for those businesses that are allowed to, or businesses that that had Paycheck Protection Program funding last year. There'll be a second option, and the second option, frankly, is the terms of it are better than before. So, but let's just get right into some of the details here. First is we already have the rules. So the Congress put in this act a requirement that the rules had to be out within 10 days of enactment, and so those came out late the night before. And they're pretty straight. I think they're relatively straightforward. I don't think banks are going to have a hard time understanding or interpreting them. So I think banks are going to start offering this very soon. I don't want to make any promises on their behalf, but I'll be surprised if we don't see the portal open from the SBA and banks doing deals yet in January. So. But we don't know for sure. What Congress said when the rules had to be out, they didn't say when the portal had to open. So that's one thing that we'll have to sit tight for. But I think it'll be pretty quick, seeing how straightforward the rules are. So this basically does two things. It says if you didn't get a Paycheck Protection Program loan in the first round, you can get your first one now, and that one works according to the rules, largely according to the same constraints and qualifications, limitations as before. Most businesses are going to be in a position where they're working on their second draw. And so let's talk about that now. So the next slide, the first is they're targeting this one towards small business better than the first round. So if you're on your second draw, before you could qualify up to $10 million, but now it's $2 million. So the maximum you can get is $2 million. For most businesses, is going to be the same multiplier, but we'll get to that in just a moment. And also in terms of the number of employees, it'll be up to 300 employees as opposed to before when it was 500 employees. And so that's it's targeted more. I think that these dollars that are appropriated in this act will go further than last time, because no more than $2 million, only up to 300 employees. And the other qualifier here is that you're going to have to be able to show that you had at least a 25% or more, so 25.00 or higher in loss in sales or revenues compared to in one quarter of 2020 compared to a quarter in 2019. The rules also say if you have an overall loss of 25% for the entire year, you don't have to do quarterly. You don't have to show it quarterly. You can just show, here are my 2020 sales, here are my 2019 sales, and I've got a 25% loss, therefore I qualify. I liked that provision because even though the law said in any quarter, naturally, if your entire year is down 25%, do the math. That means that somewhere in there you had to have at least a quarter that was down more than 25%. But there are a lot of small businesses that don't really have good quarterly financials, and if you don't meet it on an annual basis, in other words, if your sales for the year are not down 25%, you're going to have to go back and recreate quarterly, at least revenue numbers for 2019, 2020 to show your bank that or credit union that that you have at least one quarter in 2020 that was down 25%. So those are the main qualifiers, if you will. 501c6 organizations were also added. So that actually adds in a lot of nonprofits. As long as you're not mostly a lobbying organization, you can qualify as well. They'll have to flesh that out because there are organizations that do lobbying, but are they primarily a lobbying organization that are 501c6 organizations. I don't know how many of them there. Actually, that might be the chamber. Maybe you guys are a 501c6. But the loan size that you can get for most businesses, it will be the same as before. So before, you took your 2019 total payroll up to $100,000, but it's all in payroll expenses. So you take your total payroll expenses up to $100,000 per employee, and you multiply, and you get your monthly figure, your average monthly. So you look at 2019, or you can use 2020, whichever is better for you. The rules allow for you to pick which year you want to use. You get 2.5 times the monthly payroll. That's your Paycheck Protection Program size amount, unless you are in the restaurant or hospitality industry. SIC codes that start in, or NAICS codes, actually they call them now, that start with a 7.2, I believe, but your bank will check this. You get 3.5 times payroll. And so they're going further for the hospitality industry, which has been harder hit than most other industries. You know, this recovery people talked about, is it going to be a V? Is it going to be a U? Is it going to be a W? You know, what's our recovery going to look like? And it really looks more like a K, where you have some industries that have resumed growth, they're back to normal, they're going up. And then you have other industries that are barely hanging on by a thread, went down and are still going down. Restaurants, hospitality, industries, and entertainment are industries that are really on that, really in many cases are still falling.
Hey, Brian, we've got a question, a technical question. When you were talking about the head count, do you know if that's U.S. employees, or if they're going to need, if they're over 300 and have international operations? Do you know how that might affect interpreting the 300 employee threshold?
Yeah, you know, I don't off the top of my head know. Before, I believe there are not too many of our members that have that type of a situation. So it's not something I've delved into. I do remember this coming up though before, with just some friends that were trying to work it out or figure it out. And if it's under, I believe that it is just in the boundaries of the United States. I don't think that there's anything offshore that kind of gets inserted or considered in this. But yeah, that's something you'll have to, your banker will know based on rules they've been given for the portal applications, that how that turns out. So now in terms of, so that's the, the qualifiers and the loan amount that you can get. That's all pretty straightforward, pretty similar to before. The forgiveness aspect of it is going to require that you spend at least 60% of the proceeds on payroll. Now, there aren't as many requirements in terms of how quickly you have to spend that money as before. We'll talk about that in a minute, but over the period of time that you spend this money, if you want to have it fully forgiven, 60% has to be spent on payroll. There are some new things you can spend the other 40% on, or if you want to spend more on non-payroll costs, you can. It just affects your forgiveness at the end, how much of it ends up being converted essentially into a grant. But that forgiveness is going to be prorated if you spend less than 60% on payroll. So it's just a scale. So however much less you spend is the difference in your how they'll prorate your forgiveness. But if your Paycheck Protection Program loan is less than $150,000, then forgiveness is basically automatic. You're going to have to essentially certify or say, I promise I did everything I was supposed to do, but it'll just be automatic. You're not going to even have to prove anything. And then it also, there were some businesses that were kind of surprised last time when the forgiveness, they applied for forgiveness and it came through, but 10,000 short because they got an economic injury disaster loan, an EDIL advance, and that gets deducted off your forgiveness. They changed that, including retroactively in this package, and that means that you'll be able to go back to your bank if you're in that situation. You got a Paycheck Protection Program loan, and you got an EDIL advance of 10,000, or it may have been less than 10,000, but up to $10,000. If that got deducted off your Paycheck Protection Program forgiveness, you'll be able to go back, have them reapply for full forgiveness, and this act says you will be granted that. So, so that's a good sign. One other thing on that previous slide that I'd skipped over, deductibility. So you may or may not have been aware of this, but there was a battle raging among us advocacy organizations and the IRS with respect to whether you could deduct expenses paid with Paycheck Protection Program proceeds. IRS said no. IRS said, since you're not getting, since the income, the forgiven loan is not taxable income, you may not deduct the expenses. And what we said was, while that's normal tax policy, that is not what the CARES Act says. But the CARES Act was not apparently clear enough to stop the IRS from implementing a rule or issuing a rule that said that you could not deduct Paycheck Protection Program proceed expenses. What we said was, that's not good enough. I mean, so you give the Paycheck Protection Program advances out, and then you take some back by issuing a tax bill next year. Thankfully, Congress fixed that. So it is crystal clear. Congress has, the IRS has already rescinded the previous rule that said you couldn't deduct that. So when you do your taxes this year, you're going to be able to deduct all of your expenses from 2020, not just 2000, or not less the Paycheck Protection Program advances. All right, next slide now. So the nice thing about this generation of the Paycheck Protection Program is that it is more flexible in several different ways. In terms of how much you can borrow, it's 2.5 times or 3.5 times average monthly payroll. You can go through and see what was that in 2019 or what was that in 2020, whichever's better for you, you can use that. So so that's a good change in this, because a lot of people, their 2020 payroll is going to be down, and they're trying to get back up to full. So the fact that you can go back and use 2019 for these purposes makes a lot of sense. This next bullet point will really mainly only apply to you if you're a lender, but they've also, good faith mistakes. They've got some provisions where you can, you won't have to pay for those. But here's the, here's the line in terms of like startups. You have to have been in business on February 15th, 2020 to qualify. And I know that there actually have been a lot of business startups during this time. If you look at the new business filings for the purposes of tax collections, you'll see that there have been a lot of new businesses that have started up since this pandemic. But for Paycheck Protection Program, this is not meant to get a new business up and running. It's meant to support those that are already running. And therefore, if you were not in business before February 15th, 2020, you don't qualify for round 1 or round 2 of the Paycheck Protection Program funding. Seasonal businesses, similar to before, when you figure your eligibility and your in terms of your average monthly payroll, you'll have special calculations to account for that. And then self-employed individuals are eligible. They'll also be eligible for the federal unemployment with the state unemployment like before. So any self-employed individual will want to compare that. So they'll look at their, if you're an LLC or an S Corp, you'll look at your net income, and it's 2.5 times that. Is that better or worse than is that better or worse than the $300 a week plus the state unemployment? So in the next slide, the if there have been increased bankruptcy filings. If you filed bankruptcy, you're not eligible for an SBA loan, and that carries through. These are SBA loans, SBA guaranteed loans. The the first draw is if you for whatever reason didn't get a first draw and you're going for a Paycheck Protection Program loan for the very first time, then you can still get the larger amount. It's still the same kind of parameters as the first round. So that's something just to keep in mind. There are not too many of those out there, but there are some. In Michigan, we had about I want to say 116 or so thousand Paycheck Protection Program loans done in the first round. So quite a few. And then there is if you have not spent all of your first round, you can't apply for the second round until you've spent the first round. So also keep that in mind. You don't have to have been forgiven for the first round to get the second round. But if you have some left over, then you can't get that second round until the first round is up. I think those are the main points I wanted to cover. If you are an LLC with multiple members and you kind of operate separately, sorry, but you have to put it all in as one application. You can't have individual members applying separately for the Paycheck Protection Program.
Brian, we do have one, again, maybe a technical question. Questioning about if who is eligible for PPP this round. Does it include franchise owners and those with 1099K income or non-traditional payroll or 1099 miscellaneous as some self-employed people might have?
I think generally the answer is going to be yes, that they will basically they'll take a look in many of those cases, like it's going to be it'll be schedules on a personal tax return. There are a lot of those types of operations that just the nature of them and getting your income down lower, it's not really payroll, right? So you can't look at it and say, here's my payroll cost, because it's a net income number on the personal tax return. So what they'll do is they'll take the annual number of taxable income, not revenue, taxable income, divided by 12, multiply that by 2.5, and that's your total amount. There are many businesses in that situation last time that said, that makes sense. That'd be $800, or that'd be, it's just the nature of how they operate and how it hits the tax return, that the unemployment option made more sense. But you only qualify for unemployment if you're unavailable for work, or if you're available for work and unemployed. So if you're operating the business right now, you don't qualify for unemployment. So if it's the type of business where there's really nothing you can do right now, just I'll give you an example. We have a member, and what they do is linens for events. And I mean, they're literally just shut down. Like there's no other use for their linens. And so they're literally shut down. That would be a case if it happened to be a sole proprietor, or maybe the unemployment option would be better than Paycheck Protection Program. So there's nothing inherent in the rules that would keep you from applying. But my experience is that a lot of those have looked at the Paycheck Protection Program construction and said, since they use in those cases, they use the annual net income, that it doesn't work out to be enough to make it kind of worth the time, effort, and expense.